Hi, welcome to the Market Alert for Monday, the 16th of January 2022. So Friday, stocks, bonds, gold and crypto soar once again. This is everything is awesome. Environment may still be riddled with risks. I'm sure it is. Yellen warns the US will hit debt limit this coming Thursday. Will take extraordinary measures to avoid default, just as they've done every time. It's called print more money. I think it's 1.7 trillion they need to cover this next year's public spending. And finally, falling inflation expectations pair earnings-induced stock losses. So what we're saying here is that going into the next quarter, reports of profits, etc., are going to be less and could have an impact on stocks there. So probably why they're ripping the market higher at the moment, or one of the reasons. Economic news for today. Well, this is an interesting one. I've never seen this before. World Economic Forum, the Davos set, the elite, those who want to bring in the 15-minute cities. And if you're not aware of that, just have a look on the internet. Oxford 15-minute cities, Chichester, where you'll only be allowed to travel for a certain number of times a year outside of your city or town. If you think it's a joke or a conspiracy theory, like I say, look it up, plus all of the other stuff that they're involved in. I cannot believe that they've actually made it onto the Forex factory. And not only that, they actually have this meeting for the next 3 days as well. Whether anything is leaked from it, they're not secret, not like the Bilderberg Group. It's transparent, and they tell you exactly what they're up to on their website, the World Economic Forum. You will own nothing and be happy. How this is, like I say, it's in the public domain now. There's no point in going on. I could go on for hours about this bunch of, we'll keep it polite, shall we, criminals. Anyway, the other thing is Bank of England, Bailey speaking today. What else have we got? Any big news this week? CPI for the UK on Wednesday, and that's forecast to be 10.5, down from 10.7. Of course it is. PPI, RPI, etc., etc. So we'll just have to wait and see. But say what's interesting this week is this WEF thing that's going on. And if you want to know more about it, have a look at the detail there. The Davos elites. These are the people that are steering everything with climate change and all the rest of it. Anyway, let's move on to more interesting things. Let's have a look at the implied volatility. Very interesting on Friday. So the implied volatility on Friday moved lower, down to 1467, which takes us back over to August of last year, where we saw the correction take place all the way through to September and October with Liz Truss. We're heading back to that sort of level, and if we have a look at it in the 6 monthly charts, again you can see we're down at that level there now for this implied volatility, and we've had the move to the upside as well. We've got the resistance to the left. This is the Dow implied volatility, but as I always say, that the Dow implied leads everything else, and was the old adage that if Wall Street sneezes, the rest of the world catches a cold. So this is the one I found to be the best predictor of potential corrections in the market. If you have a look at the 12-month chart, you will see even more so that we're in now in that sort of area where there's going to be corrective move, 14.15, 13.49. So we're heading down to that sort of level, and there's that other one there that we've got back to August. And the last one before this was, let's have a look, see if we can get a date on this. Well, it's going to be April of last year is the sort of time for that. For some unknown reason, can't pick up a date, but we can see from the bottom there. So the implied volatility. What's really interesting though is the market hasn't actually breached the previous highs to the left yet. That still needs to be done if possible, but compared to the DAX and the FTSE, which is sitting at more or less all-time highs. Speaking of which, let's have a look at the Dow now and see where it's trading Friday and overnight. And in the Dow, we can see on Friday we had some weakness. This came early on, and then the market rallied back up, and we traded up to the 78% retracement on better GDP numbers than forecast for the UK as well. That helped to support the market. In the 30-minute chart, there's the sell-off that occurred in the morning. 2:30 though, the market was off to the races to the upside. Overnight, the market has failed to hold at the high. It's now sitting at the close. The DP is going to be important along with the 50 EMA for this market. But another big move on Friday there, coming off these lows up to the close of trade. 466 points there for the Dow. In the German DAX, we continue to move to the upside as well, as can be seen here. And if we look at the low that we have back in in the festive season, we're up 1,458 points on the DAX now. It's incredible. Vertical, melt up, parabolic, whatever you want to call it. We're nowhere near the 5-bar moving average yet. This market needs to have at least one down day. That could be today. Who knows? It depends on what they want to do with it, whether they want to move it back to the upside. Like I say, there's no major news today, apart from Bailey speaking. What time was he speaking? Let's just have a quick look. 3 p.m. Bailey speaking. I got sidetracked with the WEF there. 3 p.m. So watch out at 3 p.m. Might be a bit of activity, but there's no stopping the DAX at the moment, is there? It's just vertical. Like we said in the news last week, I think it was Friday, where it has risen from the ashes. Europe is perfectly fine now. It's no longer a basket case because the DAX has put 1,500 points on, apparently. Anyway, 30-minute chart for the DAX trading up to the high, shot back down to the DP on Friday. But as soon as the Dow opened, the market just continued to move to the upside on all of the usual BS, just bringing the market up. We're back below the high on the overnight as well. We're down nearly 50 points or so, and the market will need to hold at the 50 EMA. The DP is very similar to the Dow as well. In the 5-minute chart for Friday, you can see we had a bit of a sell-off there down to the DP. We became oversold. We had the retracement, market stopping at the 200 MA, and then managing to move to the upside. Went back through the 200 MA, but they soon brought it back and moved the market back up to the high, and that's what they've been doing all week, or since the start of the new year, is chasing the previous day's high to bring the market back, and using the previous day's low in order to move the market back to the upside as well. The market was sideways through lunch, which you can see there. As soon as the Dow opened, it was bang, we were back up to, guess where? The high. And that's where the market stopped. Overnight the evening of Friday, the market continued to move higher. And overnight, the market moving up as well. But obviously since then, we're now seeing the market moving back to the downside there, just coming back through the high and the close. In the S&P, very similar picture to the Dow, which you can see there, still at that 62, down in the earlier part of the session, and then coming back before the close, having the opportunity, or seizing the opportunity, to move the market up. We're overbought in all of the stock markets in the daily charts as well at the moment. In the 30 minutes, there's your sell-off again, and then open of the official session, you see the market moving higher. Overnight, the market struggling with the high and pulling back a bit there as well. However, the star performer is the FTSE 100. As you can see there in the daily, we continue to be moving higher, no closing anywhere near the 5-bar moving average. Again, parabolic move, long way off the 5-bar moving average. And if we look at the monthly chart, you will see that 7903 is now in the crosshairs of this market. We're at 7848, so 7,850. So not a lot to go, 50 odd points, 53, 55 points. And in the 30-minute chart, there's your move for Friday. Started off, kicked off to the big style, came back, sat on the previous day's high with demand, oversold, and then moved the market up. And again, not pulling back that strongly. Hasn't taken out the Friday high though, unlike the other stock markets have. In the currencies, GBPJPY, you can see there that we've got a retracement at the moment. Price is sideways. I need to move off this, and you can see there the weakness continues in the GBPJPY, trading down to the S2 on Friday, becoming oversold, and then bringing the market back when the dollar index opened at 130. Market is trading up to the DP, and that's a bit of a resistance overnight for the yen there. In the pound, the market continuing to move up on Friday. Bit of an inside bar there, but back above the 62% retracement. An attempt overnight to try and get towards the 78, but it's come off the highs at the moment. Let's have a look at that in more detail. Friday saw the market move higher off the DP up to the high. It then retraced 62% before going back down and retesting the DP and the 200 MA when we saw the volume come in there and then bring in the market back. And overnight, the market gapped and traded up through the high of Friday. However, since then, we found a bit of selling in the market, and we're now coming back to oversold territory. Watch the close and the 50 EMA for this market. In the US dollar, you can see that still got weakness here for Thursday and Friday. Quite a bit of volume as well. Let's have a look at the 30 minutes overnight as well. And let's just bring this up a bit. So yeah, Friday you can see we had the sell-off, and now we're trying to move back to the upside. Gold-silver ratio, whilst we're here as well, is attempting to move back down, having come back above 80, is now back below this at 78. In the silver market, we got back to the resistance to the left there, but a retracement. The market still stuck in this sideways range. 30-minute chart saw some selling initially. Once we had the news from America on the prelim, the market moved up. It wasn't prelim, it was a consumer, I think. Let me just check what Friday's news was. We only had the two as well, and I can't remember. Let's just go back. Yeah, it was the prelim, and that came out higher than forecast, which is actually inflationary, but that didn't matter. And it did for gold, because obviously that's how it's reacted with this news and moving higher. Of course, it's the stock market that should have gone down, but it didn't. It just obviously ignored and discounted. But gold showed the true picture of the fact that it was inflationary and continued to move to the upside. There's your, sorry, that was silver. I was talking about that in the 30-minute. So silver and gold responding to the prelim in the same way. Gold continues to be the star performer here at the moment, continuing to move to the upside. And there you can see on Friday, and then the prelim news, market up. I don't know whether this is just a bad tick. It seems a very big bar to not made it into the news, or somebody dumping. You know, there's no massive volume. I don't think there's no massive volume there. I think that's just a bad tick that's gone in there. So the market's up on the overnight, but the dollar finding a bit of strength there, and obviously putting some downside pressure in this market. And you can see there the market back below the high at the moment. So the dollar looks like it's got a bit of a bounce going on. If we just go back to the chart, you can see that there in the 30 minutes, a bit of a bounce in the dollar index there. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.